Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. US stocks closed higher on Friday, recovering from earlier losses that followed a mixed non-farm payrolls report on soothing reassurances from Fed Chair Powell. Throughout a turbulent week that featured tariff announcements on Canada and Mexico, later amended to include a 1-month delay for the auto sector and USMCA goods, the S&P 500 fell by 3.1%. The tech-heavy Nasdaq finished 3.27% lower, entering correction territory due to debates over US tech stock valuations following the emergence of DeepSeek in January and Alibaba's newest AI model unveiled last week. This week's focus will be on US CPI, PPI numbers, as well as jobs job openings and the Michigan Consumer Sentiment Index for further insights into the health of the US economy. Let's take a look at the charts of the S&P 500 and the Nasdaq as we start the new week. Okay, this week we're starting with the Nasdaq weekly chart just to give you a bigger picture of where exactly the Nasdaq has come from and where it currently sits. As you can see, there's been a very strong uptrend since this low we struck, or the lows we struck in the back end of 2022. And by and large, the Nasdaq has followed this trend channel support higher, testing it into the end of last week. Now, when we drill down onto the daily timeframes, you can see that there was a break below there, only for it to be reversed, and that's left a potential loss of momentum reversal candle coming from off this uptrend support around 19,900-ish. It did, however, close below the 200-day moving average, so that's a little point of concern in terms of where we will go in the early part of this week. But for mine, while we're holding above this uptrend support at 19,900 and above this low we saw on Friday night around 19,736, I think we need to give the opportunity for the Nasdaq to have a corrective bounce, potentially up towards this area here around 20,800 to 21,000. So that wouldn't be a big call considering that the Nasdaq has fallen by about 11% here. Looking for a little bit of a bounce back into this area here while we hold above this swing low and while we hold above this uptrend support. Now, if for any reason that uptrend support and the swing low breaks on a sustained basis, then I think your downside target becomes the September lows around 18,800. So at this point of time, it's shaping up to be a very pivotal start to the week, but we've got some very clear levels which may provide the basis for a short covering rally. For the S&P 500, a slightly different picture emerged because the uptrend support was higher. It came in around 58.60-ish, and it broke that in the early part of last week. The 200-day moving average comes in a little bit lower, sits around 57.30. And as you can see on Friday night, we did have a look below there, but you would be probably confident saying it didn't really like it below there. At least some short covering took place on Friday, and we closed back above the 200-day moving average. Now, again, we need to keep an eye on the fact that we have had a potential loss of momentum candle. We're back above the 200-day moving average. That could be the basis for a short covering rally back up towards, say, 5,900 in the early part of this week. But if for whatever reason we saw the downtrend resume with a break below the 200-day moving average, combined with a break below this 56.66 low, then we start to look at where the downside targets come in. And for me, it's this area over here around 5,400. You've got two lows here from September. And of course, there's a low back here from July. So they're the levels that I'll be watching for in the early part of this week. Keep in mind, it has been a turbulent 3 weeks, and I'd be expecting more of the same this week. Thank you for listening and have a good week ahead.